is I do believe, in my opinion, somebody, and whether that's nation states or whether that's other billionaires, somebody has changed their mind and they want to accumulate. And they don't want to accumulate at high prices, they want to accumulate at low prices. Based on previous cycles, we should get somewhere between 1 to 2 times fair value. If fair value, we'll round it to 100. I think there's going to be less leverage. We don't have FTX anymore. We don't have Bitfinex. There's not as much leverage in the system. There's still leverage. Obviously, we've seen that in the last couple of days. But my estimate was we'd go to 150. If you just look at the pure cycles, it says 170. Some would say we're going to get to 200. I know Max is saying 220 and others. I'm taking 150, maybe it's 170, but somewhere between 150 and 170 to me is where we end up in Q3. And then we start crypto winter again.
What you just explained and how you just explained it makes me think that it's worth $1 million a coin.
Oh my God, more, way more.
But
Yusko estimates that Bitcoin could reach $150,000 to $170,000 in this cycle, with some speculating it could hit $200,000 or beyond. However, he cautions that the absence of extreme leverage, previously fueled by platforms like FTX, might temper price acceleration. Nevertheless, he believes that the 4-year cycle remains intact and anticipates a peak sometime in Q3 2025 before entering another cooling-off period. For long-term investors, Yusko advocates for a diversified portfolio with a strong equity focus, which extends beyond traditional stocks to include private equity, real estate, and commodities. Bitcoin, in his view, should constitute 5 to 10% of a balanced portfolio with higher allocations for younger investors who can weather volatility. He stresses the importance of being an owner rather than a loaner, prioritizing assets with intrinsic growth potential over fixed income investments.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Right now, you've got massive demand. Right? You got BlackRock buying every day, you got Millennium buying. But here's the thing, Millennium isn't buying long. Millennium is a market neutral shop. I love when the 13Fs come out and everybody says, oh, look, Millennium bought $2 billion of the ETF. I'm like, yeah. And they shorted at least 2 billion, maybe 2.1 or 2.2 of futures against it because they're just arbing the spread between the futures price and the spot price. There's something called roll yield. Right? So the futures price is higher than spot price because humans are optimistic. And over the course of the month, that price rolls down. And that's why these futures-based ETFs destroy capital. They're really profitable for the people that structure them, but not if you hold them. It's like a triple levered, short ETF. They destroy capital because of the rebalancing and this roll yield between futures and spot. So we're in this thing where a year ago, the ETFs get approved and everyone's like, oh, it's going to be great. The price is going to go straight up. And we went up in anticipation. And then when it happened, because no one was talking, Anthony, about the same day, January 10th, the exact same day, not a coincidence, the CME listed massive numbers of new Bitcoin futures. So what's happening is every time someone is accumulating, these big dogs, okay, the banksters can naked short against it to suppress the price. Now, part of that's just to make money, right? You're short here, you're long here, you make about 11, 12% annualized, and you lever it up 8, 10 times, and you make a lot of fucking money. You make a lot of money. I will argue that you got two things going on. One, you got this natural arbitrage that's going on between people who are long the ETF, the financialized version of Bitcoin, and short the future. And that caps the price movement. Second thing that's going on is I do believe, and I don't know if it's Buffett, I don't think it's Buffett, but somebody has changed their mind. In my opinion, somebody, and whether that's nation states or whether that's other billionaires, somebody has changed their mind and they want to accumulate. And they don't want to accumulate at high prices, they want to accumulate at low prices. So what do? you unleash the bots on all the leveraged speculators. See, here's the problem. So here's my outlook for the year. So Bitcoin's fair value, as you said earlier, is around 95K, maybe 98, somewhere in the high 90s. What's that based on? That's based on Metcalfe's law, which is just a theoretical equation that takes all the inputs, the number of nodes, the number of transactions, et cetera, and comes up with a mathematical formula for the value of the network. And networks are valuable, right? 5 largest companies in the world aren't really companies, they're networks. Like, what is Amazon? They don't make stuff. They are just a network of buyers and sellers, and they take a cut. And their margins are really high. But the reality is that the Bitcoin network is very, very valuable. The Bitcoin network, the network itself, the secured network that's never had a fraudulent transaction. How many times do you have to get a new Visa number because your number gets hacked? Often. Bitcoin's never been hacked, not once. Ethereum hacked, Bitcoin never been hacked. And it's had like 20 minutes of downtime in 16 years, so it's pretty reliable. Well, why? It's the most powerful computing network the world's ever seen. It's 1,500 times, not 1,500%, 1,500 times more powerful than CERN's supercomputer. So this is a really valuable asset, just as a computing asset. Well, then the number of nodes keeps growing, the hash rate keeps growing, all the fundamentals keep growing. So we can calculate this fair value. When the price is below fair value, who buys it? People like you and me and all the other people we traffic with, investors. We like to buy stuff on sale. We like to buy things below their fair value. That's what we do, okay? And what does that do? That slowly pushes the price toward fair value. Now, as the price starts to move, who gets involved? Traders. Traders don't really care about fair value. They just want movement. They want to scalp a little here, there, up, down. They don't really care. They just want movement. Then who comes in? As we start to get towards fair value, and maybe we can get a little bit above fair value, well, then the speculators come in. Well, who's a speculator? Speculator is the opposite side of a hedger. So if the price is fair value, and I'm a miner, okay, and I can produce it below fair value, then I will sell my production and I'll sell it forward in the futures market, and the speculator will come in and take the other side. Okay? That's just a natural phenomenon. It's like an oil producer or a gold producer. You sell forward production to lock in your profits to pay your bills, and somebody speculates. But then the problem is, as the price starts to move, it starts to generate attention, and there's this self-fulfilling prophecy. And then the gamblers come in. And the gamblers do a couple things. They don't give a shit. They don't care about value. They don't even know maybe what they're buying. They just see movement and they want in, and they use leverage.
Yusko outlines the distinct market participants influencing Bitcoin's price action. At the bottom of the cycle, long-term investors, including value-driven buyers, accumulate Bitcoin when it trades below its fair value. As the price rises, traders enter the market to capitalize on short-term movements, followed by speculators who take on leveraged positions. Eventually, gamblers, often unaware of Bitcoin's fundamentals, flood the market, pushing prices into overbought territory. This cyclical pattern has repeated consistently due to Bitcoin's programmed supply constraints and predictable market psychology.
And so what happens, we have this 4-year cycle. What's the 4-year cycle? Some of the most brilliant programming really ever, in the sense that every 4 years, the block rewards, the number of Bitcoin that are given to the miners to secure the network, which is a genius idea, it gets cut in half. Well, why is that a good idea? Well, think about it. All your miners have fixed costs. Electricity is fixed, the machines are fixed. So if you decrease the number of rewards in half, in theory, half of them should go out of business. But they don't. Why not? Because they're like, well, then I just won't sell. And I'll force the bid up in order for me to sell. So after the halving event, we see this basic doubling of fair value, okay? This doubling of price. Well, that increase attracts the speculators. So the halving event happens when we're below fair value because of the 4th cycle. So that first part of the cycle is that recovery from winter, and it starts to move toward fair value. Then we get into what's called crypto summer, which we're starting to get close to fair value, and the halving event occurs. That was a year ago. Then we get crypto fall. Well, what's crypto fall? That's where the price starts to move above fair value and the gamblers come in. And the further it gets is based on leverage. In the previous 3 cycles, we got to just about 2 to 2.1 times fair value. So the first one, fair value was 10. I'm sorry, the first one, fair value was about 3,000. We got to like 6. Second, it was fair value was 10. We got to 20. The third was 32. We got to 69. So we get to these levels of extremes. Well, then gravity works, and somebody comes in, squeezes the people who are over-levered, and the price starts to correct. Now, there are those who would argue that that's happening right now. The cycle's over, and we're headed down. No, because we're too close to fair value. My guess, and I said this back in January, was the 4-year cycle extends sometime into Q3. Is it October? Is it September? I don't really know exactly, but that's based on long-term history. So in theory, based on previous cycles, we should get somewhere between 1 to 2 times fair value. If fair value, we'll round it to 100. I think there's going to be less leverage. We don't have FTX anymore. We don't have Bitfinex. There's not as much leverage in the system. There's still leverage. Obviously, we've seen that last couple of days. But my estimate was we'd go to 150. If you just look at the pure cycles, it says 170. Some would say we're going to get to 200. I know Max is saying 220 and others. I'm taking 150, maybe it's 170, but somewhere between 150 and 170 to me is where we end up in Q3. And then we start crypto winter again. So that's the longest answer you've ever had to a simple question, particularly if you have a little bit of capital for multi-generational stuff for kids, grandkids, meaning, 70 to 80% equity. Equity doesn't mean stocks. It means private equity, real estate equity, commodity equity, private equity. I would own Bitcoin, 5%, 10%. The younger you are, the higher that percentage should be. In my mind, I could get you up to a pretty big number if you're in your 20s and 30s, but in your 60s and 70s, maybe 5 or 10% is enough. And then I would still try to focus on equity and being an owner of things as opposed to a loaner and owning bonds.
Mark Yusko's insights offer a masterclass in Bitcoin market mechanics, shedding light on institutional strategies, price manipulation tactics, and the asset's fundamental strength. While short-term volatility remains inevitable, his analysis underscores Bitcoin's long-term value proposition as a generational wealth asset. Investors who understand these dynamics can position themselves strategically, leveraging market cycles to maximize returns. As Bitcoin continues to evolve within the financial system, its resilience and network strength make it an asset class worth serious consideration for the future. Please like and subscribe.